Hello, my name is Andrea Fout, and I am the Assistant Finance Director for the Village of Glendale Heights. Today, I wish to take a few minutes to explain the tax levy cycle and its process. State statute requires that the annual tax levy ordinances be filed with the county clerk on or before the last Tuesday in December. The goal of this presentation is to provide a brief explanation and overview of the tax levy process and to give you a summary of the proposed tax levy for 2015. The tax collection cycle goes like this. In December, the village submits its tax levy ordinances to the DuPage County Clerk. Tax bills are prepared by the county treasurer and are mailed out in May of the following year. Taxpayers pay the DuPage County Treasurer in two installments, one in June and the other in September. The DuPage County Treasurer will distribute the village's share of the property taxes that were collected. Here is an example of a property tax bill and is one example of the many thousands that will be mailed out next year. A common misconception is that all of the taxes paid on one's tax bill come back to the village. This is not true. The village is one of many taxing bodies that make up your total property tax bill. The most confusing part of the tax levy process is who gets the tax levy money and how much. This chart represents the breakdown and percentages of taxes retained by each taxing district. On average, and depending upon where you live, 10.9% of the property tax burden is assessed by the village. So for example, if your property tax bill is $6,000, the village will receive 10.9% or $654, while the remaining percentage goes to other taxing districts. School districts collectively get the highest percentage by far. In this presentation, I will only be speaking to the village's 10.9% portion of the property tax bill. If you look at the details of a $6,000 property tax bill, this table depicts what each separate taxing body receives. Again, the village's portion of the $6,000 total property tax bill is only 10.9% or $654. An important distinction of the village is that there is not a separate Park District taxing body. Instead, the village has a recreation department. What this means for residents is that the $654 includes the levy for the recreation department. And because the village includes recreation as part of its overall tax levy, our comparison to other municipalities can be skewed. A major advantage to having a recreation department, as opposed to a separate park district, is the benefits of a unified administration, finance, IT, and other support services. To give you some perspective on the difference between park district tax levies and the village's levy for recreation, note in the table that the village had the lowest rate in 2014 as compared to surrounding communities, which have separate park districts. Transactions such as market-driven transactions, bank-owned sales, sales from foreclosure proceedings, and short sales are all counted when determining the EAV. The law was recently changed to include items that had not been previously taken into consideration, such as foreclosures and short sales. While transactions such as related sales, sales of partial interest, and transfers of properties not advertised are not counted when determining the EAV. Each of the respective townships within the village transmit their tentative EAV data to DuPage County. Properties within the Bloomingdale Township make up about 89% of the village's total EAV, while the balance of about 11% is in the Milton Township. The tentative EAV for Bloomingdale Township reflects a 0.84% increase from 2014. Last year at this time, the reported EAV for Bloomingdale Township showed a negative 1.8%, and the year before that, it was a negative 4.1%. So you can see that there are finally real signs of recovery taking place. The EAV for Milton Township reflects almost no change from the prior year. The overall EAV is down only 0.0056% compared to 2014. This chart shows how EAVs have changed over the last decade. Due to the reality of declining housing values, the village's main focus has been to remain sensitive to residents and the recommended tax levy. The village issued Build America bonds in 2009 and 2010, totaling nearly $38 million. The first installment of federally mandated budget cuts, also called sequestration, took effect in 2013, just after the village's 2012 tax levy cycle. At that time, it was believed that a deal would be worked out that avoided these federal budget cuts. Such was not the case. Treasury rebates, which were supposed to equal 35% of the interest paid on Build America bonds, have been reduced by 6.8% in the current federal budget, meaning that over $108,000 in interest costs are not going to be rebated and will need to be borne by the village. So going back to our previous $654 property tax bill example, this is a breakdown of what services the village provides with its portion of those property tax dollars. This slide shows the village's tax levies from 2008 up through what is being proposed for 2015. Please note no increase is being considered. Furthermore, the total proposed 2015 tax levy is less than 1% more than it was in 2008. If you have any questions about the property tax levy cycle, property taxes, or other finance-related questions, please feel free to call the Finance Director, Bill Poling, at 630-909-5342, or you can send an email to Bill at bill_polling@glendaleheights.org. Thank you.